the rising mortgage rates we are seeing getting close to 7% as of this morning. It's a big talking point. There's a lot to unpack. Tell me what you think.
Yeah, Tom, it's actually the volatility that exists right now is the reason why we said let's go, and all these conversations that you and I always have, just kind of strategizing, looking at the market, behind the scenes. Let's go launch this podcast, Knowledge Brokers Podcast, because if you're not keeping up on it, almost every day right now, certainly every other day, you've got to stay up on it.
Yes.
It changes so fast. Just 2 weeks ago, we were at 5.99. By the time we end this podcast, we could be at 7%. Like that's how close it is. We're just touching up on 7% mortgage interest rates. And it is the only thing to talk about this week. It's the biggest impact on housing. It's the biggest impact on everybody's real estate business. Now, we're in a seasonal time where there's demand
Mhm.
that buyers are like, I want to go buy a house. It's the new year. It was kind of a weird thing. It was like a light switch January 1. It is, from mid-January to mid-May, you always get an uptick in mortgage applications. It's the time of year people are out there shopping and all of that. But it was like, okay, we're buying anyways. And that was even before the rates came down. And the minute that demand got really strong, albeit 43% lower than last year, so not nearly the demand, nationwide that we had last year, but when it got strong in markets, and then that jobs report came out,
Mhm.
boom, you just saw the 10-year and the 30-year fix go shooting up, and we're going to hit 7. Here's what I believe. This is my prediction, Tom.
Let's get
When
out
we
the
do
crystal
Knowledge
ball.
Brokers, I'm going to get out the crystal ball here for a second, just based off of the trends right now. When we do Knowledge Brokers next week, I think we'll have had a day where we had a 7 handle, or we'll be sitting at a 7
Mhm.
handle. And we know what happened last year when we had 7%. Now, that was in a season, that was the end of the year. That was in a long, 6-month run of mortgage rates, doubling and just going up month over month over month. People got worn down. People traditionally in the fall will slow down. I'll do it after the holidays. I'll do it after the holidays. There's a resistance right now because we're in that seasonal time period where buyers are buying homes. So we'll see what happens this time when we hit 7%. And I do believe there are going to be buyers that are just like, I give up. I'm buying either way because I need to get out of this apartment. I've got a growing family. Whatever my situation is, I'm buying now. I'm not waiting another year. There is pent-up demand. Zillow had their earnings report this week. Redfin had their earnings report. We're going to talk about, I think, Redfin a little bit later,
Mhm.
and what Glenn Kelman said on CNBC. There is pent-up demand on these sites. It's obvious that the traffic indicates there are people who have been trying to buy the last 2 years who are still unable to buy, and eventually they're going to throw the towel in and just buy regardless of this rate. Uh, it it leads me to believe, Tom, that it's going to be a rocky road throughout 2023 if you're a real estate agent, and you need to take that into consideration in your business. You need to recognize the seasonal opportunity you have in front of you and not get confused that this is a moment of opportunity and not the 2023 story. The story is untold. We're still in the first or second inning here.
Yeah, that's a great point, Byron. And there's a couple things I want to unpack here because I've been studying this as well. So midweek, we saw a report come out on CNBC that mortgage demand plummeted 7.7%, right? That usually doesn't happen this time of year. It goes the other way. Secondly, in the Glenn Kelman interview yesterday on CNBC, he came out and said, well, we've got half the inventory we had from 2016 to 2019. So that's what's fueling a lot of this demand is that typically in downturns where we see rates rise, inventory will also rise. And that's just not happening right now because of these 3 and 4% handles that folks are locked in their current homes. So
Yep.
that's one of the biggest drivers here is that this game the Fed has been playing of moving rates down aggressively in 2020 and coming back up is actually causing more of the problems than not. And then while all this is going on, we're seeing really strong economic reports. The economy is stronger than people anticipated. So we're in this
Are we ever?
we're in this weird spot. I mean, they talked about the jobs report that we referenced last week. They said it's almost too good to be true. And so we have this great employment data, people can't buy these properties because inventory is not there. And I agree with you. We are going to see a 7 in rates. They're coming in at 6.75 as of this morning. It's going to go to 7, and the 10-year has really indicated that in the lead indicator status. And on top of all this, in the Glenn Kelman interview, and he looks at Redfin traffic data, and Redfin's got a
And
great
they have a lot of it.
yeah,
44 million unique website users a month. They have a lot.
great website. People go there. I mean, it's one of the best real estate websites that are out there. They're seeing demand down on their website, and that is an absolute lead indicator.
In quarter four,
Yes.
we don't know what it
Yes,
looks
great
like
point.
in
Great point.
January and
I'm glad you
February. I would
clarified that.
imagine it's up right now. Actually, I think it is up. Let me see if I have that in front of me because I did see. I think it was. It was definitely down year over year. 44 million unique monthly users. That's for the year of 2022, which is down a decrease of 2%. That makes sense last year, right? We
Mhm.
saw certainly in the second half. Okay, I don't know what it is January and February, but I'd imagine it's up a little bit.
I mean, in the interview, he said he was seeing that it was down on the site. I'm imagining he's looking at real time.
Okay, so this is on
This is
that
in the
CNBC
interview,
interview
yeah.
that you
So
watched.
yeah, this
Okay,
came out yesterday. So
okay, there you go.
they haven't released the data. He's looking at it every day like a good CEO should. And then on top of that, and Bobby can put this chart up in for everyone here. This comes from our friends at Keeping Current Matters, and I find this very interesting. Is they chart 4 categories: weak buyer demand, limited buyer demand, good buyer demand, strong buyer demand. So take that for what it is. And they have this chart here that they've been charting where rates were going. Once you get above 6.5%, that looks to be the threshold where buyer demand goes from good to limited, which is the territory we're in right now. And
Hmm.
when you get to 7, I don't care what anyone says, that 6.99 to 7 has an effect. And 7
Yep.
is where we saw the biggest slowdown last year, October, November. I mean, when rates hit 7, it was a problem. So and people did kind of slow down. So we'll see what happens. And I'm clear this is why a lot of economists like Logan Motoshami at Housing Wire are saying the Fed needs to slow down here and stop raising rates because they come out with another basis point increase at the next meeting. Well, what's that going to do? Is that going to push rates even higher? I mean, that could really cripple demand here for a lot of folks. And maybe that's what they're trying to do based on all the rhetoric coming out of the Fed.